Hey everybody, Chuck Barone. It is Monday, March the 18th, 2024. Ripping right through this month, man. It is going by quickly. Almost finished with the first quarter. Things moving along pretty rapidly. As always, before we get rolling, let me take a second and welcome everybody to the show. And as always, thank you guys for your support, especially you guys on live. We really appreciate you guys being here. All right, so let's talk about this week. We know it's a big one. We know we got the Fed meeting this week, so we know we're going to hear from Powell. We know, um, that could change the markets pretty dramatically. So let's talk about what we're looking at here today. Today's markets, well, markets rallied today. Stock market up. I guess tech leading the way today. You had Nvidia and Alphabet both having very good days. The Dow rallies 75 points. Sitting at 38,790 on the Dow. The NASDAQ up 130 points, 16,103. And the S&P rallies 32 points, sitting at 5,149. So the market's rallying nicely today. I think this might be a little bit of optimism about what the Fed's going to do and say this week. We got some other economic data. I got a feeling that these markets, enjoy the day, guys, because I don't think we're going to get a super positive week coming up by the time we finish it out. So enjoy these stock gains today. Hopefully we can hold them through the week. I'm not seeing it that way. The bond market. So today the bond market had kind of a mixed day. The 10-year selling up 3 basis points today, 4.34% for a 10-year treasury. The 2-year unchanged, sitting still at 4.73% for a 2-year. So we still have that inversion, signaling recession. We'll see if that ever happens. It's been that way for about 2 years now. But this is an indicator that usually ends up being right. And it looks like since it hasn't gone back to normal, it's still signaling recession coming, right? So the bond market we'll see how it finishes the week as well. The dollar today up small, up 15 basis points. Sitting at 103.60 on the index. Dollar still sitting strong, and I believe by the time this week is out, we're going to be pushing 104 on the dollar. Precious metals today having a mixed day, kind of a surprisingly mixed day. Gold up $4, sitting at $2,160.60 for an ounce of gold. Silver falling 18 cents, sitting at $25 even. Silver building support now at 25 and above. This could be a little bit bumpy, but it's going to get there and stay there. Believe that, guys. So hang in there with silver. Oil today, another update on oil, man. $1.78 for a barrel of West Texas Intermediate today, now sitting at $82.82, way above the upper limit we were seeing. I still think it's a little bit overpriced. We're moving into driving season. We'll see if oil can sustain these numbers. We're going to get some reports on oil this week that could change this oil price around a little bit. And Bitcoin today selling off a little bit as well, down $1,517, sitting at $67,000 even the last time I looked. Bitcoin's still a good, strong number. I think they're kind of consolidating as well, blowing out the weaker. We got a little bit of data about Bitcoin coming up later in the show. Now, like I do every week on Monday, just a little bit of talk about what we're going to get as far as data this week, what we can expect. Today is Monday, usually a slow day. Not a lot of data comes out on Monday. We'll get some earnings trickling in. I haven't seen any of that yet. Tomorrow, though, starts the party. So tomorrow, the Open Market Committee meeting of the Federal Reserve will start. We'll see if they have anything they want to release early tomorrow. Also, we'll get some real estate news. We'll get building permits, which are expected to be up. We'll get housing starts, also expected to be up. You're going to see new home building probably going to do well because there's no existing homes on the market. We've talked about that on the show several times, why that is. People not wanting to give up their in the 2s or 3% mortgages, so they're holding onto their properties longer. Baby boomers also tending to live in their houses a little bit longer, so they're kind of skewing. It used to be the average life of a mortgage was about 5 years. Now it's over 7 years. So we'll see. And I think that, having these mortgage rates in the threes is something that could also extend the time people are going to hold these mortgages. Nobody wants to give up these numbers because you're never going to see them again, I'm guessing, right? On Wednesday, Wednesday's Powell Day. The Federal Open Market Committee meeting will finish. They'll make any announcements. They're not going to announce any rate cuts, that's for sure, guys. But Powell's presser will be the important one. We'll also get data on what the Fed sees as far as the economy, inflation, and stuff going forward. So Wednesday is going to be a very, very big day. The interesting thing is Powell typically doesn't talk till after the market closes. So we'll see what leaks out during the day, how the markets are going to anticipate what Powell has to say. And then, of course, how the market really will react on Thursday when they're digesting the actual news. Also on Thursday, going to be a big day. We're going to get current account information for the U.S., also known as deficit information, expected to be $209 billion for the fourth quarter. I hate using the word billion because it just makes it sound smaller than it really is. 209 billion equals 209,000 millions. 209,000 millions of dollars. Sounds like a lot more than 209 billion, doesn't it, guys? So we're going to get deficit information from the government leaking $70 billion a month in overspending or undertaxing or however combination of things, spending more than they're bringing in. So also on Thursday, we're going to get existing home sales, which are expected to be down. We'll get our weekly jobless claims number, expected to come in at 214,000 this week versus 209,000 last week. Also, we're going to get leading indicators, which are expected to be down. We're going to get Philly Fed report. This one's going to be a jolt for the market because it's expected to be down 4% from last month after being up 5.2% last month. So a huge swing to the negative on the Philly Fed survey. We'll see how markets react to that and what the numbers actually come out. And Friday will be a quiet day as far as data, but I'm sure it'll be a very active day in the markets as everybody tries to adjust their portfolios to the new data that we have digesting over those past 3 days, which is going to be quite a bit. Now, I wanted to talk a little bit about the Fed this week and what we can expect, what I believe the markets will, how they'll react, what we can expect from Powell. Guys, in December, the markets were pretty certain that March, this meeting, was going to be the first rate cut. And they were expecting 5 rate cuts this year. Well, we can safely put that to bed. And obviously nothing is 100%, but I'm telling you guys right now, there's no rate cut coming this week. The inflation data has just been too high for the Fed to start cutting rates. The market now adjusting its bets, moving the first rate cut expected in June. We'll see. I doubt that as well. And expecting only 3 rate cuts this year now priced in, as opposed to 5 that they were originally pricing in December. So Powell, what I believe is going to do, obviously the first thing is he's going to announce there's going to be no rate cut. They're going to hold rates steady, 5.35% Fed funds rate. He's also going to revise inflation expectations, and I'm guessing he's going to revise those numbers up. They can sugarcoat it and paint it any way they want. They basically have been wrong about these numbers. Remember in the beginning, there was no inflation, then it was transitory, then it was, oh my God, this is real, then it was 9%, and the market was freaking out, 11 rate hikes. They haven't really gotten it right or been honest or a combination of both since we started this whole episode. But I'm guessing that Powell will kind of let the market know that inflation is going to be here this year. Probably going to spook the crap out of the market because the market's going to get the idea, like I am, that rate cuts are, if we're lucky, we get some cuts by the end of the year. He'll also going to praise the economy, I'm guessing, talking about how wonderful and resilient the economy is, best in the world. Hold your nose when you hear that crap, guys. And also he'll probably praise the jobs report as well, jobs numbers. Supposedly the U.S. growing jobs like never before, even in the face of everybody feeling so damn gloomy and crummy about this economy, right? I'm guessing he's going to spend a few minutes criticizing fiscal policy by the U.S. government. He had a pretty good show on 60 Minutes last night. Was talking about the government on an unsustainable fiscal path. I'm sure he'll make mention of that and the inflationary effects of massive government spending and borrowing, how the government borrowing is skewing the bond market higher and is only going to continue to swamp the bond market as they borrow more and more and more. Thousands of millions, forget billions, thousands of millions, right? He's going to be cautious, I believe, with the bad news. He's not going to come just out blurting it and spook the market like crazy. He's going to try to give information without causing a stampede one way or the other, up or down. It's going to be quite a tightrope walking act that we're going to get. I think that this is certainly not going to be the party that everybody expected when, especially in last December, when they were kind of projecting what 2024 was going to look like, turning to be, they were wrong, pretty dramatically wrong. Inflation numbers going up, not down. The PPI numbers, the wholesale inflation really spiking. So we're going to get consumer inflation going forward. Not exactly what the market was planning for. So I think that it's going to be a very, very interesting week this week with the Federal Reserve. They're really got a tightrope to walk because they have to tell us that they're not going to be cutting rates as fast or as often as the market would like. At the same time, trying to do that without spooking a stampede out of the stock market, out of the bond market. I got to see how he does it. I got to see how he manages it. When we had Alan Greenspan, we could always count on Greenspeak, where he's going to talk for hours and nobody's going to understand 10 words of what in the hell he said. Paul is usually a little more direct. It's going to be fascinating to see exactly how he deals with the news he's going to have to deliver. Some other quick stuff we need to go over. Oh, by the way, Powell what the market's going to be listening for is a change in their attitude about cuts versus hikes. If the word hike or diligence and the Fed won't be afraid to do what it needs to do to contain inflation, language that's more hawkish about inflation than dovish is going to be what we're going to be listening for, because that's what's going to move these markets. All right, so let's talk about a couple other quick things before we sign off for the day. I'm doing pretty good on time here. We got more fallout from the real estate decisions. I was laughing reading these articles today. They're talking about how buyers are going to save money because of this decision. Newsflash, they're not going to save jack, not a dollar, not a nickel, okay? What's going to happen is they're going to pay more because they're going to have to pay their own agent. And now these knuckleheads are talking like, well, if sellers don't have to pay the commission for the buyers, maybe they'll lower their prices. I don't know where they conjure up this fantasy crap, guys. Okay, if the house is worth $450,000 and you don't have to pay the seller's agent that 3 points, okay, which is quite a bit of money, right? We're talking $13,500. How many people believe that the seller is not going to take that $13,500 and put it directly into his pocket where he wants it? Who believes they're going to cut prices? Who believes the seller gives a crap about the buyer and making the buyer happy? The seller has one objective: get the most money he can for the house he's selling. It's going to be crazy. So this nuttiness. Now, we had some comments about what I talked about on real estate last week and how it's going to affect it. We had so much to go over today. I can't really get into responding to those comments, but I'm going to do that tomorrow. We're going to talk more about this real estate decision and how it's going to affect the schmuckatellis, the working people in this country who are trying to buy their first house, move up to a nicer house, a nicer neighborhood, whatever it is. We're going to talk more about that. Also, quick hitter today, wage growth slowing fast, guys. Wage growth last year at this time, year over year, 9.1% gain. Now, year over year, this year, 3.3%. So it's coming down quick. Looks like there's less competition for the jobs. it looks like, the employers are not having to spend as much money to get the people they want on staff, wage growth falling. Listen to this, guys. Right now, we have 8.2 million people in the United States working more than one job. That's bananas, man. Okay, figure we got 330 million people here roughly. Let's say even half of those people are working, right? Now, of those half the people that are working, a certain percentage of those people are going to be professionals, doctors, lawyers, accountants, blah, blah, blah. There's not going to be people who have two jobs. So the pool of people that would work two jobs is probably significantly smaller than the actual working population numbers, right? So I'm guessing we probably got 10% of people in the workforce that would work two jobs, actually working two jobs. It's freaking crazy, man. And guys are not doing this to get ahead like they used to. They're doing this just to keep their nose above the water, bro. It's a disaster. Interesting numbers for Peter Schiff. Well, Peter Schiff, I might have mentioned this. I was listening to his podcast. He's usually a pretty bright guy. He was saying that the United States now is trading full-time jobs for part-time jobs. Great for corporations. They don't have to pay full-time wages. They don't have to pay benefits. Terrible for workers, typically needing more than one job. That's why you're seeing so many work too. So that's why he's saying job growth continues higher, because it's all part-time crap jobs. Bitcoin today, interesting stuff on Bitcoin. I was reading, they said the ETFs in Bitcoin, because they're so popular already, more money has flowed into Bitcoin this year in the first 3 months of the year, not quite yet, than was put into Bitcoin the entire year of 2021. This is just the beginning. I saw one analyst who believes Bitcoin's going to hit $250,000 this year. So sky's the limit on Bitcoin. This is something that now more and more people are going to be getting involved in. People who know nothing about Bitcoin, blockchain, cryptos, or anything else are seeing these returns. They're going to get into this market, guys, believe me. So you're going to see quite a bit of volatility in Bitcoin, big swings as the new, the scared, the unknowing get involved in it. It's going to be fascinating stuff to watch. But I tell you this, guys, the market for Bitcoin and other cryptocurrencies is growing. I don't want to really say go buy some. That's not what I do. But a prudent person is going to take a good hard look at this, because it is the fastest growing market in all of finance right now. And lastly, one quick hitter. Barron's today comes out with a super bullish article on gold, pushing gold. Once the mainstream now starts talking about gold and silver, and it's not just some fringy news guys or some retired politician or pillow guy. Once the mainstream media starts getting into it, you can see the trend start to turn. Gold and silver already rising, going to continue to rise. I think it's going to be a pretty bullish year for precious metals. Anyway, guys, I've been rambling. That's it for the day. Get ready for buckle up for a crazy ass week. We'll see what happens tomorrow. Tomorrow might be the last of the quiet days for the week, because the Fed's just going to get started with their meeting. But we'll see if anything leaks out. We'll be back here tomorrow to bring you guys the news you need. As always, guys, we appreciate your support. We thank you so much for watching the show, watching the videos. All you people on live right now, we really appreciate it. We'll be back tomorrow. If you could, guys, please hit the like button. It changes the algorithms around. Hit me up in the comments and questions. And remember, tomorrow we'll be talking more about the real estate decision. We'll talk about some of the comments I got. And, we have some really bright people watching this show. So I want to start a little bit of a conversation about real estate. We'll see where it goes. Anyway, guys, that's it for the day. We appreciate your support. We'll be back tomorrow to bring you the news you need. Until then, guys, take care. Thanks.